Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is a nice sunny day here in Seattle. We got to love them. Take them when we get them. November 8th. And these sunny days are not going to stay around too much longer. So I'm enjoying this. And today's a good day because we have Ben Julius with us from Toronto, Canada, all the way over there on the other shore with Lionheart Development. Ben is a developer, which is great because we don't have a ton of developers on here. So we always love to get their wisdom. So Ben, thank you very much for hopping on the show.
Thanks, Gabe. I really appreciate it, man. I'm excited to be here.
Absolutely. I told you right before we got on here, we like to start with stories. So why don't you take us to the beginning of your story? How'd you get started in real estate?
So in 2015, I was a college basketball coach in Canada here and parted ways with my administration. We had a falling out in terms of philosophies and where we wanted to go with the programs. And I moved back from out west from your neck of the woods, just a little bit more north, and came back to Ontario. And if it wasn't for my parents, I would have been homeless. But so fast forward a couple months, met my wife, got engaged. We were driving in a truck and we heard something on the radio. I've always been really interested in real estate, but never really knew the power of it. We went to a 2-hour course, which I thought was an MLM scam. So I wanted to leave, but she made me, sit down and we went through it. And then we went to a 3-day course. And from there, we got into real estate. We learned the power of leverage and to basically be able to leverage other people's money. And we started out small. We bought a duplex, the proverbial turnkey duplex that was not turnkey. We learned, hands on the job pretty quickly. And then from there, we started doing conversions from single families to duplex, to triplexes, to fourplexes, to fiveplexes. And then didn't really love being a landlord. So we were kind of looking at best ways to get out of the day-to-day landlord activity. And it was, okay, let's scale as many doors as we can, as quick as we can. So we found a building that we were going to turn into 13 doors or 14, from basically 2 doors to 14. And then through that transaction, I met another individual who wanted to get out of his building, and that was going to give us another 35 doors. And then the 13 doors went from that tear down to 20 doors. So we're like, okay, we're at 50 doors really quick. And then my architect says to me, he goes, well, why don't you pick up this piece of parcel over here? I can help you broker that. We did that. And it was, okay, there's 60 more doors. And before you know it, we were kind of like, okay, I guess we're in a little bit of a development situation here. And then COVID hit, people stopped paying rent. And I was, we couldn't, our landlord laws up here are very similar to California. So we couldn't just evict people for non-rent. And we had to kind of readjust here. And my architect, again, planted another seed in my brain about, okay, well, you own this right here. You own this right here. Why don't you try to get the stuff in the middle? And then you can go really up and do a lot of different things. So I really say that we came by development organically. And through this whole process of learning kind of the ins and outs from the architectural standpoint, we also built relationships with what I like to call gray hairs. When I was coaching, we always want to have a gray hair on the bench. And it's a, I guess you could say it's kind of a derogatory term, but it's basically somebody who has experience and has been around the block and is able to kind of navigate some situations. So formulate a relationship with a couple of those guys and they are the baby boomer generation and they want out. So we were able to pick up 2 more pieces of property, pieces of raw land that are able to be developed just because guys just didn't really want to deal with it anymore. So we took that on. And as of right now, we have, I don't like to say it's really assets under management. It's more projects under management. So we have over $300 million of projects under management. And we're doing some creative things in our 2 condo buildings that are I think are going to revolutionize the way that developers look at condos. So we're really excited about all that. And I'm sure we'll get into some questions with that. But yeah, that's the Coles Notes version of the last 6 years of my life.
Nice, man. I love it. And it's crazy, your story, you said organic. I totally agree. It seems like it's been a very organic your career so far, one step after the other. But it happened very quickly. I mean, 6 years, that's not a lot of time, especially to get into where you are today in development with, you said, what was it, 300 million, something like that?
About that. Like that's the value of projects.
Yeah.
When finished. But yeah, so I know people like to say assets. I mean,
yeah.
they're raw land right now. So projects under management that we're working with. So it's been fun. And we threw 2 kids there, and a marriage and 2 kids there in the mix. So
easy, right? Might as well. You got all the time in the world.
That's right. So I never thought I'd be the one to go to bed at like 9 o'clock, but man, I hit 8:30 and I'm like pounding against the wall. Man, I need to get to bed. So
you and me both. Good. We just had our first 2. She's only 5 months old, so she's just a wee tot right now. But
congratulations.
I'm in the same boat. Yep.
Around 8 months, it gets really fun. Really fun.
Yeah. I can see that already. I'm excited for her to start talking and walking around. But yeah, I want to go back. You went through so much in your story, and there's a lot of gems that I feel like we can pull out there. I mean, at the very beginning of your story, you're talking about you bought a turnkey, quote unquote, property, and I just wanted to call that out because your first property and my first property, it's always going to be harder than you think. And anybody just getting started, even if people say you're buying a turnkey property, there's probably a lot more that you don't even see. That you will see once you actually buy it and get into it. So I just wanted to call that and put a little highlight onto that, because that happens to so many people, and then they get discouraged and they don't go further. But expect that first one to be hard.
Yeah, totally.
Yeah, for sure. And I like that you said that your mom and dad took you in after, when you went back. That happened to so many people in our generation. I'm sure you're probably right around the same age as me. So when you decided to do your first development, you were talking about you bought that duplex and then you turned it into 14 doors. How did you make that decision? What was it about the project that kind of stood out to you that made you realize that this property that you own was better suited to be torn down and redeveloped?
So the location was one. Yeah. It was located on a transit line and a projected light transit rail.
Yeah.
In our city. So that was one location. I was like, okay, we need to learn a formula to kind of create the highest and best use of a property. So we walked through it a couple of times, and we can slash it up and put a bunch of single bachelor or studios, those type of units involved in it. And then when you kind of get digging down, I mean, it's very old. It was a very old building. So we were like, if we take the top off, the whole building's going to fall off anyways. So it was a matter of, okay, let's redesign this whole thing using the current foundation, knowing that as soon as we start doing any demolition work, that the walls are going to cave in and fall down. So let's just design a brand new building. So that's what we did. And it was really nice. And then we get to our city, and the process was a little bit different. They didn't like the fact that it was not on grade, but there was units on grade, and they put a new bylaw in.
The slant of the land.
No, yeah. So like they wanted us to have 3 feet above the road grade, okay. Right? So you'd have to walk up to the apartment. So that was a whole redesign. And then we're just like, then the opportunity to purchase the parcel 2 parcels over came over, and then just really shoot through our municipality, dragging their feet. It really pushed us in to, all right, let's find something better for this opportunity here. And because when you submit something to the city here, it's a long time. So you just kind of hurry. I like to call it let's hurry up and get to the stoplight, teenager driving like momentum, right? So you get everything you can possibly into the city, and then it's like a brick wall for, a minimum of 10 business days to 6 weeks before you hear anything back. And we have so much turnover in our municipality that sometimes it's longer, and it just kind of, you stew, and you're like, I'm not one to sit still. So we were looking at different opportunities, And this came up. And so we're like, okay, well, let's abandon that. We'll use what their comments when we build the whole new structure. So that was what happened. And it all was going to be rentals. And then COVID hit, construction costs went up here in Canada, in our neck of the woods. The prices haven't really come down too much. I mean, they have dipped a little bit, but not.
Yeah, Toronto's the not. I mean, worst in the sense like the prices have gone the highest in Toronto. In all of Canada, Toronto has the highest housing prices.
Yeah, and we're up there in North America too. Like we're top. I think it's top 5 in North America, next to LA, Boston, and Manhattan.
Wow,
right?
That's crazy.
So it's sheer because 90% of our population lives within 100 miles of the border. Right.
Oh, wow.
So nobody wants to, we have a ton of land, but nobody wants to go live in that land. It's so cold. We don't care about that. So we want to be as close to the sunshine as we possibly can. So the only place for us to go is up. And in this area, in this region, we're sandwiched with the Great Lakes and one of the biggest protected green belt areas in the world. So yeah.
So I think most municipalities, especially on the coastal regions, it takes a long time to, get the permits and everything that you need to do development. Mm-hmm. What is the turnaround time if you've had a full cycle on any of your developments, from, the identification of the land to the sale? Like, what is the full turnaround time?
I would say 6. We haven't done a full turnaround yet because we pushed all of our launches back. So we really extended our projects, but I would say right now, given the landscape, you're looking at 6 years. So
6 years. Wow. Okay.
Yeah. I mean, you can really shorten it up, but we want to be conservative. So what I say is it takes you anywhere between 6 months and a year to do your personal due diligence and lock the property up. You're doing a minimum of, once you actually get into the property, you're doing a minimum of 120-day due diligence. Like it's just the length of time that things take to have your team go over, scour all the reports and whatnot. And then, you have to put a site plan approval in. And if you're doing raw land, it's different than if you're repurposing a building. But if you're going from raw land to a building, you're looking at a minimum, once you get into that project, 5 years. So however long it takes you on the front end to get into the project, you're looking at 5 years. Once you've locked it up and once you're in, you have to put a site plan. That takes about 6 months to get everything put together that you need for your first entry into the city, in 4 to 6 months. And then depending on how busy your municipality is and when they get back to you and how many comments they have on everything. But yeah, I like to say 5 years for a full cycle minimum.
That's crazy. That's a lot of carrying costs.
It's not a little amount. I can tell you that. Right now.
For sure. That's nuts. Interesting. So, you mentioned also during your story, you're talking about, getting the gray hairs on your board. I think that's a great idea to get somebody who's already been, has experience in the exact thing that you're trying to do. Get them to be kind of an oversight board for whatever you're doing. How did you go about creating that, approaching the people that you wanted to kind of have as your, board of directors, essentially? Take me through how that worked.
Yeah. So I wouldn't necessarily say it's a board of directors with our company because we're a small shop. It's more advisors. Okay. Right. So one of the guys we purchased the property from is a longtime developer in our area. He just turned 75 or 70, a little bit more than 75 now, but he just wanted out. He wanted to go to the lake and retire. And so he kind of basically took on some seller financing on a great project. And we're seeing it through. And I call him for advice all the time. It's funny though, because when they were developing, it was kind of like the Wild West in the cities, right? It's whatever submitted kind of got approved.
Go build it.
And now it's just like, oh no, your shadow encroaches on somebody's garage. You got to do. So it's just things that he doesn't understand, but it's so good to hear. Okay, call this guy. I know this guy. His son now is running his company. It's form work here, like. This municipality that I'm in, it's Hamilton municipality. So it's 45 minutes outside of downtown Toronto or an hour. And it's really, I don't want to say it's not incestuous, but it's very dominant. People kind of grow up here. They live here. They build here. they give back to the community here. So we want to keep everything local. It's one of our things that I'm really proud to do. Like, I can tell you that our excavation crews, our form crews, they're all local. They do all the digs here in Hamilton. They do, all the form work here in Hamilton, because although we're at an hour outside of a major city, worldwide city, we have different soils. Like, we're on the edge of what we call an escarpment, not a mountain. People call it a mountain. Just trust me, it's not a mountain. It's just a cliff, and then it goes down to the lake. So, but the soil on the bottom side of the escarpment is completely different than anywhere else. So you want to have crews that are familiar and know how to mitigate those things. And, we're all about mitigating as much risk as we can, especially right now. I like to refer to it as survive and advance right now in the climate, whereas we have a ton of buildings that have stopped construction and are in receivership because they got caught in the middle of this downturn. And it's unfortunate, but, I want to call it a little bit of luck. I think I think sometimes people want to say that, oh, I'm such a great investor. I'm such a great investor. I don't make mistakes. You've got lucky. Because at the end of the day, if you're good, you're lucky. If you're lucky, you're good, right? So there's risk, there's luck, there's all that in between, and you
can mitigate the risk, but the risk is always there. I mean,
that's right.
You never know what's going to happen. Yeah,
exactly. And we've been lucky because of how long our municipality took on things, because we would have broken ground on one of the projects. We're like, no, we're going to wait. Like, our carrying costs are minimal compared to what will be if we're in the ground when concrete goes up 38%. Right. So those are the type of things that we've been fortunate for. So we're just, our whole goal right now is on two of our projects is to make sure that when some of these costs come down, and when the interest rates start to kind of bottom out and plateau and kind of come down a little bit, that we are ready to launch and ready to build. So one of the ways that we mitigate risk is that we will not break ground. We will not launch a project to the public for pre-sales until we're 90 days away from breaking ground. And nice. I do that. I say that because talking to the gray hairs, like them telling me, like, try to keep your launch window and your breaking ground window as tight as you can. So that, to me, I mean, that's mitigates a ton of risk right there. Right. So these guys who pre-sold condos and are now in the middle of, or haven't broken ground, and, they have their construction financing just gone through, but their sale price is certain. It's tough. It's tough, right? It's a tough industry.
Do you give the advisors salary, equity, or any sort of compensation? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Right now, no. They haven't asked for it, so I hope they don't watch this. You may have just opened up a can, Gabe, for me, but no, it's basically
it's them giving back. Yeah,
it is them giving back, and the one guy has been. I want you to be successful with this project. I'll do whatever I can to help you. We bumped up his seller financing, from 4% to 7%. Right. Mm-hmm. Because he was gracious enough to extend for a year. Right. Yeah. So we've done that. And basically for me, I want to create relationships. And what I do with these guys is if they want to stick in the investing side, I always offer it to them. Like once we have our structure set up to take in funds from a GP LP standpoint, we offer it to them first. You guys want to put some money back in and go ahead. And then we'll offer them first right of refusal at an actual unit if they wanted it. So try to take care of them as much as we can without bleeding my pocket dry, right?
There you go. So there's two more things. We've already gone through our time, but I'm just going to keep us going because there's two things I do want to touch on.
Sure.
You've already mentioned interest rates. You're waiting for construction costs and interest rates to go down. What's your crystal ball say in terms of, when that's going to happen?
I mean, man, if I had a crystal ball, we probably wouldn't be on this conversation right now. But everything up here in Canada is saying that we're going to start to see some relief come second quarter of next year.
Oh, okay. Interesting.
Yeah. So I would say by the end of the second quarter. So we're probably looking at into, June and July, beginning of the third quarter. So, we'll see. I mean, construction prices, here's the difference is what people don't understand is crews need to work. People need to lock up jobs and nobody's building right now. So companies don't want to lay off their guys. So they will cut rate on certain things in order just to keep their guys working. So if they have to operate at a net zero on one or two projects, but they keep their whole payroll, they keep everybody moving forward, that's beneficial for them. So, I think that we're starting to see the squeeze on different parts of the industry. So which relieves other parts of the industry. So, before there was not enough, labor force to do all the work. Now it's the opposite. So it's the opposite of supply and demand type of thing, right? So you can kind of pick and choose your form crews, your framing crews, like those things are a little bit more sustainable. So you can cut some dollars on that side. So, at the end of the day, we just want to have all of our P's and Q's, our T's crossed, our I's dotted before we actually put a shovel in the ground. Because once you put a shovel in the ground, you're committed.
Game
and at
over,
that point, investors' money's committed, and you can't get out.
Yeah, I've heard people have predictions from all that ranges. We're going to be in this depression until 2050 or whatever.
Right.
People have all these different predictions. I hope next year, first quarter, second quarter, that'd be nice. So
yeah,
crossing our fingers there. Last question. You mentioned that you're doing condos, and you have some creative ideas in that space. Just give us a bullet point. What are those ideas? Let's hear them.
I'll go through this really quickly. So what we've done is we've taken 350 to 400 square foot units, and they actually operate as 700 square foot units. So our studio bachelor apartments are equipped with an expandable living system. So it comes with a bedroom, a living room, and a home office. And nice. The bed goes up into the ceiling to a really comfortable couch that operates now as your living room. Your entertainment center where your TV is on moves out. So it's equipped with a home office. So you just press a button. Now you have a home office. And then one of the things that I found lacks in smaller condominiums is storage and closet space. So we've also equipped
that's why you got self-storage facilities. That's what I do. So just come to
everybody's got stuff. They got to put it somewhere.
Yeah.
So we've created this company called REI Living has created these three systems, and one of them is a walk-in closet. So you press a button and the closet kind of moves out and then moves back, kind of like a bookshelf or a desk or something on the other side, and it moves out. But the nicest thing about this is you have so many rules and regulations about a certain amount of your condos need to be barrier-free for wheelchair access. We can set the depth on the closet to accommodate a wheelchair. So now all of our bachelor units become wheelchair access. The home office can become wheelchair access. So it's really beneficial on so many different levels, and it cuts down construction. Listen, the system costs money, but it also cuts down on construction costs. So we are going to be one of the first. Two of our buildings are going to be they were redesigned completely for this system. And we basically increased our density by 30%.
Wow.
Yeah. So, on one of the units, we had it at 90 units, and now we're at 132. So we added 40 units there. And the other one, we're at 103 units, and now we're at 145. So, we're really trying to increase this. And the nice thing is it also helps our bottom line because we can sell these at 30% more square footage. We basically sell them at a one bedroom. right? You're getting 3 rooms in a bachelor, and it's really, I encourage anybody to check it out. That's oreliving.com. Have a look and you'll be amazed. And I think that if developers don't do this, they're going to be behind the times within 10 years. Their building will become obsolete.
Yeah. Yeah. I've seen, like, on TikTok and stuff, I've seen videos of that, that idea of kind of conserving space by having it, change. And it's really interesting. It's really intriguing. It looks like, especially for kind of a bachelor pad type of condo, it would definitely work. And it sounds like, increasing 30%, increasing the number of units that you can get in there by 30%. That is a huge benefit for the community, because you got more people that can live there, and you guys, because it helps your bottom line. So sounds awesome. I love it. I'm going to cut us off there. That is our time. So it's time to jump into the quick question round. Are you ready?
Perfect. Yeah.
All right. It starts with education. Give me 2 recommendations. Could be books, YouTube channels, documentaries, whatever. I need 2 of them, 1 for general life wisdom and then 1 for real estate specific.
Perfect. So for real estate specific, I would say Flip the Script by Orrin Claff. It's more of a capital raise type of book, but it kind of teaches you how to read people a little bit. So it'll come in value with negotiating deals as well. Basically, it teaches you how to, have the person think the way that you think, right?
Cool.
And from a life perspective, The Power of One More by Ed Mylett, it really helped me kind of transition some thought processes and put it into actual real life. And one thing that's kind of helped my business is Monday.com from an organizational standpoint. So
I love Monday is what I use. I freaking love it. It's an awesome
great
CRM system. So you're speaking to the right person here. All right, moving us on to the next question. This is for your younger self. So let's go back to the Ben who was still a coach way back in the day. Actually, that wasn't way back in the day. 6 years ago, the Ben that was a coach who was thinking about his next steps. Go back to him, look him in the eye, give him 1 piece of advice moving forward.
Put a ring on your wife's finger quicker than anything.
Nice.
No, don't lose yourself, right? Like when you go into your next, take every skill you've gained from coaching and apply it to your business. You were a successful coach, and a lot of those traits are applicable to the next thing that you do. And it just goes for everybody in life, that every experience that you've experienced, you need to take that into your next profession or your next goal or whatever it may be. I have an accountability book, I call failure book, whatever, but you got to take those things with you as you go. That's your backpack. That's your tool belt. That helps you get through crappy times like right now in the market. Like, what did you do when something went wrong? So don't lose yourself. That's what when you're going to your next one, and learn the value of compounding interest, because it's great.
all good pieces of advice. Don't lose yourself. I feel like that's really important, especially when you make a mistake or you hit something, you go into a situation that didn't turn out the way that you wanted it to. A lot of times you can get discouraged, but if you just take that lesson and apply it to the future experience that you'll have, it makes that lesson turns it into a lemon, or whatever that lesson that phrase
lemons
is.
Into lemonade and lemons, or whatever.
Yeah, whatever it is. You and I know what we're talking about. So good piece of advice. I'm going to move us to the next question, and this is about your business. The first 3 positions we hire form the foundation of our company. So what were they for you, and would you do it differently if you did it again today?
Yes and no. So I would do it differently. Yes and no. So we hired an admin assistant right away. If you can, you need somebody who kind of manage your schedule when you get busy. My wife has been a lot of that for me, as well as we hired an admin assistant. Second one was an operations manager, to somebody to train, basically have a second you. You can't clone yourself. Find somebody who you can train that will be you eventually. And the third is a full-time bookkeeper. I think it's important that I'm not a great finance guy in terms of sticking with like running numbers, doing all those things are fantastic, but doing the day-to-day of receipt logging and doing these things, like got to a point where I had such a big pile that I would just ignore it, and it got bigger and bigger and bigger. So now we're backtracking and backtracking and backtracking. Put out some money, and you're going to be able to grow your business a lot faster.
Yeah, I think that's a really good piece of advice, and something I kind of learned too late. I just hate having to go through those little line by line, trying to figure out what went where, especially if you don't, if you have a credit card that you use with this business, and maybe sometimes you use it for your personal use, and you just got to figure out where where all the expenses go. Nightmare. Yeah, good piece of advice. Moving us to the next one, and this is about usually I say the US, but you are in Canada, so we're going to say all of North America. Big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
The market that we're in, Hamilton, Ontario. It's one of the fastest growing regions in North America. Our city has committed $7 billion to redevelop the waterfront. We have $125 million renovation going on in our downtown core with the entertainment center. And we have over 1.5 million or 1.2 million people coming to our country a year, and they have nowhere to go. And they don't go, like, they come to the GTA. So we are considered the Greater Toronto Area, and where our transit lines are starting to go into Toronto. This is one of the best places to invest in Canada for sure. North America, I mean, man, I love the sun. I go anywhere down in the Sun Belt. I don't think you can go wrong down there with investing down there.
Yeah, for sure. All right, next question is about finding the deal. It all starts with getting in contact with the seller. So what is your favorite way to generate leads, find your next deal?
Relationship building. You never know who knows who. And I refer to this quite often lately as well, is that everything's a spider web. So people know somebody who's trying to dump a property or get out of something. They know what they're into better than some other people. So go to meetups and go to different things and meet people. And if you see two old guys and talking in a coffee shop, just go sit there, buy them a coffee, sit down and talk to them, because they're retired for a reason. And you never know what they own or what they have. And, I can't even tell you how many deals now cross my plate that I just don't have the bandwidth to go with. But I love the coffee shop thing. Go down, sit down, talk to some gray hairs, enjoy it. They have so much knowledge, and they're willing to just give it to people.
Yeah. It's all relationships. I like everything's a spider web. I feel like that's a great quote, because it's so true. You talk to one person, they know 20 people, and then eventually it's just your network kind of, I don't really like the idea of networking, but your relationships, they help you along your career path, especially when you give back to them. So good piece of advice. I'm going to move us to the next one, and this is about lessons learned. Not every deal goes the way that we think it should be going. So what is a deal that kind of went sideways, and what was the lesson you took from it?
A deal that kind of went sideways. So, I always live by the principle, it's never as good as it seems, and it's never as bad as it seems. So we've had a deal that we're in right now that our capital raise fell short, and we're back at the proverbial grindstone, capital raising. And we're just putting in different systems, and we're trying different things. And, I think this goes along with what I just said, is that when you go to a networking event, one of the ways to kind of get out of a bad deal is to learn from others and talk about it. When you go to a networking event, you don't always have to meet everybody in the room. You go find like 3 or 4 people and build a relationship with them, and they may be able to help you through stuff. And that's what happened to me. I have, 3 or 4 people that have really helped me get through this kind of roadblock that we're in, and put together some systems that were really helping for us and moving us forward. So I'm really happy about that. The proverbial, we got caught on a flip, was great, and market went out, was not great. So what do? We turned it into a duplex rental, and now it's carrying itself barely, but it is. And we'll wait till the market comes back, and we'll put it back on the market. So that was kind of an adjustment we did, but yeah.
Nice. So the lesson there was to reach out to people in your network. And then also it sounds like make sure that your underwriting is good enough to where the market can fall out and you can still have a backup plan to make it flow.
That's right.
Nice.
That's right.
I like it.
And right now, I think it's important everybody is super conservative on your construction cost. Like we put a 15%. We're probably, when we do our actual line items, we're probably 3 to 5% inflation on the numbers itself. But then we're also putting in a 15% contingency, 10%, and then a 5% developers contingency just to be safe and give us that buffer. When we go to people who we want to invest, we're targeting an 18% IRR for you. They don't realize that we have a 15% contingency on top of a 3% inflation per line item, right? We want to make sure that I can hit that 18% target and give it to them and they get their money back, because the next project we're going to be asking for 20 million and I can show we did this. It's a lot different, right?
Yep. Perfect. All right, man, that wraps it up. One of the last question is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do it?
Best way to do it is Instagram at Coach Ben Julius, or LinkedIn, just Ben Julius, Line Art Development, LinkedIn, and reach out. Best way. That's the greatest way, because I'll reply to a message right there. It's better than an email and a text. Perfect.
I will put that link in the show notes. If y'all want to reach out to Ben, just go ahead and click the little more in the description. It'll pull down the full description. In there, you can find his URLs.
Awesome.
All right, man. As I said, that wraps it up. Thank you very much for hopping on the show.
Thanks, Gabe. I appreciate having me here.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.